Is this a bottom or is this the bottom? Here's how I'm going to gauge and find out. So here we are on the E-mini S&P 500 futures weekly chart. That's right, every candlestick is an entire week of chart action. And I just want to jog your memory and bring you back to the end of February 2025, all right? So the Trump administration had been in office about a month, things were chugging along, and then it started to weaken on a variety of news. Now I'm going to do this video without referring again to President Trump or the other T word, tariffs. We're going to just talk about the charts, but obviously keep in mind those factors are at play. Now, if you're new here, my name's Hema Reddy, and I use price action like what you see here, market timing, that's the bottom axis of your chart, and momentum, my favorite indicator being the RSI power zones, to boost my trading and that of our tribes. So yeah, back to that fall, right? We started weekend. Then things really tanked after the April 2nd Rose Garden announcement. Again, I didn't say the T word. And here we are, already on the first day of the following week, showing some stability. Now, this is a weekly candle. It's not complete, but I want to bring your attention to something. Notice that that journey from the February high, if we trace it back, these are Gann drives, these orange segments, began at the October 2023 low. And prior to that, the most significant high was here in August of 2023. Well, look at this. Where did we just return to and start stabilizing? That's right, the August 2023 old top. So this is where my Gann trading patterns come in. Gann was a trader from the early 1900s. His price action techniques still work today, and they work even better when you combine them with other modern trading methods. So where does this have me looking? Well, we're going to have to look at the daily chart for a more short-term view, but right now this is more like a bottom. I don't personally believe this is the bottom yet. So the next chart I want to look at is the daily chart, and this is going to be just a plain old chart, no other annotations. So now we see more detail of that fall. And because this is the daily contract chart, and we'll see that this was not the front month until recently, right? If you trade futures, all this old history will be limit days and hash marks. Don't worry about it. When you plot this as a weekly chart, as I just showed you, you can still discern support levels. Let's just really get dialed in, though, to this recent action, okay? As early as March 27th, I had a forecast in place for futures to trade lower, separate from any of the T words. And they did trade lower into that target, and they overshot it, meaning the market pushed lower than my forecast projected. That's a sign that the current market cycle is weak. So any recovery attempts, I'm taking more as relief. Maybe somebody was short and they're exiting their position for profit. Maybe people who are trying to buy short term are just taking advantage of this little pause. Either way, I want you to look at the RSI power zones. Notice how starting in January and then reinforced in February, they stayed between the bear resistance power zone and the bear support power zone. If you're not using momentum this way, where you're adjusting based for the market condition, you're just sticking to traditional overbought, oversold, you're probably leaving money on the table, or worse, losing money, okay? So if you want to learn about the RSI power zones, check out the link below this video to learn more from me. Now, I'm going to relate this back to another market that is not a stock, it's not another index, but it's extremely important. Then we're going to make my game plan to determine how to navigate this move. That market is the VIX. And the VIX is the fear gauge of the market, okay? This is the CBOE Volatility Index. And you can see that the past few days it's really shot higher. Now today, on Monday, April 7th, it shot higher and traded lower. And you might look at a big red candle like this and say, oh, the VIX is weakening. Well, it already weakened, but it didn't stay weak. It couldn't even get back into halfway of the Friday, April 4th candle. All of these different nuances of the levels within a candle is something I teach in my Gann candlesticks trading system, and it's looking at candlesticks from the inside out, not just multi-bar patterns. So where does this all come together? Well, here's what I want you to do. During these volatile times, which I personally suspect will last for at least another week or two, pretty choppy trading, wide range days on and off, make sure that no matter what you trade, you are checking in on the VIX. Because guess what? The VIX moves opposite to the market. Look at how the VIX moved from the bull support power zone right into the bull resistance power zone. And this isn't the first time it did that. It did it back in February, right, when the market was making a top. the VIX was rising from bull support, and other times in history of the VIX. Now you might say, well, this is the highest VIX we've ever had at 60 and 50. Well, you better load up more information on your chart and scroll on back. Scroll on back, because the most recent spike we had was actually the August 5th, 2024 yen carry trade, which was another low day in the market. But prior to that, there were definitely higher VIX levels. You just got to keep on looking. And here we are. I didn't change time frame. I stayed on a daily chart and brought us back to the pandemic. Can't believe it's been 5 years. But look, the VIX came up to 85.47, guys. So don't tell me the VIX is too high, so that's it, it's going to turn around and come back down. You have to look at it relative to its own history. All right, so let's just fast forward back to the current status. Now, that's the daily chart of the VIX. I'm going to end with the 60-minute chart of the VIX for some perspective. I keep this right next to my daily chart. And what's very interesting is the daily chart of the VIX showed that liftoff from bull support. And on this 60-minute chart of the VIX, we also have a recent liftoff from April 2nd, right? That was before. This was 1:15 p.m. Eastern. That was a couple hours before the Rose Garden announcements. And look, pushed up right into bull resistance. So right now, if you want my takeaway on what I think is going to happen, this is just my observation. This is not financial advice. Here we go. Get ready to write your notes. The VIX is working off its overbought conditions on the RSI power zones. The daily chart of the ES futures has come to oversold area and had a one-day recovery, but just like how the VIX couldn't get past halfway of Friday's range, futures couldn't reclaim more than half of Friday's range. Therefore, on the VIX, while it stays above this 3581 platform, I expect it to have room to resume higher. If it comes into 3581 and pushes lower, that would be good news for stocks. Making sense? All right, awesome. Now on the stock chart, now on the ES chart, I have individual levels that I share on intraday charts. I share this on the 60-minute time frame multiple times a week to my S&P Edge Pro subscribers. So if you're interested in getting my daily take multiple times a week on the S&P 500 market, that's where you want to meet me. All right, guys. So keep an eye on that VIX. I just gave you the level to watch for quote unquote support in the VIX. And to finish us out, let's watch for the resistance. So if we get above this 54.55 area, so 55.01, then it means the VIX is probably on another path higher, and I would stay out of the way of going long on the market. All right, if you found value in this video, please give this video a like, drop a comment down below, and if you haven't already, subscribe for more updates, and I'll catch you soon.